It was a positive day for most of the session on the Australian share market. It was also the third day of devaluation for the Chinese currency, the renminbi. But we also saw China with a press conference explaining away the devaluation that we have seen in the Chinese renminbi, saying that it was looking to move more towards market rates. Now, the market not so concerned with what China is doing as it's concerned with the timing of China's move. First of all, coming at a time when China's exports and manufacturing is looking quite weak, and secondly, so close to when the US Federal Reserve is looking to raise interest rates, possibly in September. But all up, it looks like the market conclusion was that we're perhaps at the end of this devaluation for the time being, and really shrugging off that third devaluation that we've seen during the Asian session. The volatility, though, that we have seen this week has been good news for the gold miners. We saw the gold subsector up by 3.2% today, with Kingsrose rising a massive 16.2% in one session. And of course, a massive day in terms of earnings reports. Starting off with Telstra broadly coming out in line with expectations, but the stock down 2.2%, and that's on the back of its forward statements. The market concerned about the low levels of growth that Telstra is forecasting. Telstra in the current financial year, FY16, is forecasting mid-single digit growth for profit, and it is predicting low single digit growth for earnings before interest, tax and amortization, or EBITDA. But one area which was a bright area in Telstra's result was mobile services revenue, which jumped by 7.2%. That's the fastest growth rate that we've seen in 3 years. But at the end of the session, Telstra down by 2.2%. Mirvac came at the top end of guidance and expectations. The stock down by 0.3%. I guess the highlight was the residential part. Now, residential makes up 25 to 30% of profit. And here we did see a record $2 billion worth of pre-contract sales. Not surprising given the housing boom that we are seeing in Australia at the moment. I guess with Mirvac, one of the risks to be aware of is that the office sector is still looking pretty tough, and with 200 George Street expected to come online in the current financial year, that could be a risk to earnings. Moving on to Tabcorp, and we did see profit up by 15%. Looks like Tabcorp will be focusing in on dividends. Now, this year we saw total dividends of 20 cents being paid out, a rise of 25%, and on top of that we saw a special dividend of 30 cents which was paid back in March. In the new financial year, we will see the dividend payout ratio lift to 90% of profits. Tabcorp shares, though, down by 1.3% today. Goodman Group also coming out an 84% jump in profit there, but most of that due to revaluations of its properties. In fact, $710 million worth of revaluations. I guess with Goodman Group, one of the impressive things is that it has an investment side of its portfolio and a redevelopment side. And if we have a look at earnings, about 57% of earnings comes from the investment side and about 43% from the development side. Now, in the past year, we've seen Goodman Group sell about $1.9 billion worth of assets, but it looks like Goodman Group is in no hurry to return that to shareholders. In fact, it'll be reinvesting that back into the development pipeline and also looking to pay down debt. Goodman Group, though, up 1% by the end of the session. Crown also coming out with results. Its results a little bit overshadowed by news that we will see Chairman James Packer stepping down as chairman and will now just be a director of the company, choosing to focus in on Crown International in Las Vegas as well as in Macau. The stock down by just over 3% today. Also, if we have a look at the earnings coming in slightly below expectations, we have seen some of the strong momentum that we saw from Perth as well as Melbourne in the first half results just slowing down a touch, and we know that things have been pretty difficult over in Macau, where we have seen profit down by 45%. And finally, Fairfax having a good session today on the market. The stock up by almost 5%. Now, we have seen underlying revenue up by 0.3%. That's the best result that we've seen in around about 8 years. Some of its new initiatives doing quite well. For example, its domain business saw revenue up by 45%, and its events business saw revenue up by 41%, although the traditional area of print advertising saw revenue down by 11%. still not as bad as the loss in percentage terms that we saw last year of 24%. So Fairfax having a good session. So altogether, a massive session. The Australian market positive for most of the day. And as you can see from the intraday graph behind me, those beautiful gains just disappearing in the last half hour of trade.